stop scrolling for a second, because if you're investing right now or planning to start soon, there's a very high chance you're making at least one of these mistakes. And it could quietly cost you years of progress. Before we begin, do me a quick favor, like this video so the algorithm shows it to more people who need to hear this, and subscribe if you want practical money and investing advice without hype, scams, or unrealistic promises. Also, stay until the end, because mistake number 5 is the most common and the most expensive, yet almost nobody talks about it. Now let me say this clearly, most people don't lose money in investing because they're unlucky. They lose money because they repeat the same predictable mistakes over and over again. And the scary part, many of these mistakes feel smart in the moment. Let's fix that. The first big investing mistake people make is investing without a clear goal. Most people say, I want to invest to make money. That's not a goal. That's a wish. Are you investing for retirement in 30 years? To buy a house in 5 years? To generate monthly income? To protect your money from inflation? Without a goal, every market movement confuses you. A stock drops 10% and you panic. Another one rises 5% and you rush in. You don't know whether to hold, sell, or buy more because you don't know why you invested in the first place. Investing without a goal is like driving without a destination. You'll burn fuel, waste time, and still feel lost. How do you avoid this? Before you invest a single dollar, answer 3 questions. What is this money for? When will I need it? How much risk can I emotionally tolerate? Long-term goals allow long-term thinking. Short-term goals demand safer strategies. Once your goal is clear, decisions become easier and emotions become quieter. Now here's the second investing mistake, and this one ruins more portfolios than market crashes. Trying to time the market. People love to say, I'll wait until the market crashes, or this stock is too high right now, or I'll buy when things feel safer. Let me be honest with you. By the time things feel safe, most of the gains are already gone. The market doesn't send a notification saying, now is the perfect time to buy. And even professional investors, people with teams, data, and decades of experience, get timing wrong all the time. What actually works isn't timing the market. It's time in the market. Consistently investing over time beats waiting for the perfect moment. This strategy is called dollar cost averaging, investing regularly, regardless of market conditions. When prices are high, you buy fewer shares. When prices are low, you buy more shares. Over time, it smooths out volatility and removes emotion from the process. If you're constantly waiting for the dip, you may end up watching from the sidelines while your money does nothing. Quick reminder, if this video is helping you so far, hit the like button. It really helps the channel grow and keeps content like this coming. Now let's talk about mistake number 3, following hype instead of fundamentals. This is where people chase whatever is trending. Hot stocks, crypto buzzwords, guaranteed returns, social media screenshots of insane profits. Here's the problem. By the time something is everywhere, early investors are already exiting. Hype creates urgency. Urgency kills logic. People buy because they're afraid of missing out, not because they understand what they're buying. They don't know how the company makes money. They don't know the risks. They don't even know why the price is rising. And when hype fades, as it always does, panic selling begins. So how do you avoid this? Simple rule. Never invest in something you can't explain in 1 minute. You should know what it is, how it makes money, why it has long-term value, what could cause it to fail. If someone else's excitement is the only reason you're investing, that's a warning sign, not a green light. Now, mistake number 4 is subtle, but extremely dangerous. Ignoring risk and diversification. Many people think risk means losing money, but real risk is not understanding where you're exposed. Putting all your money into one stock, one sector, or one asset class is not confidence. It's concentration. Yes, concentration can bring big gains, but it can also destroy your portfolio overnight. Diversification doesn't mean you won't lose money. It means you won't lose everything at once. A well-diversified portfolio spreads risk across different companies, different industries, different asset types, different regions. That way, when one area struggles, another can support your overall growth. Think of diversification like shock absorbers for your finances. It won't prevent bumps, but it will stop the crash. Now, before we get to the final mistake, subscribe if you want more content that helps you build wealth slowly, safely, and sustainably. No hype, just strategy. Now let's talk about the fifth and most costly investing mistake: letting emotions control decisions. This is the silent killer. Fear during market drops, greed during market highs, impatience when progress feels slow. People panic, sell at the bottom. They buy aggressively at the top. They abandon good strategies because they're boring. Here's the truth no one likes to hear. Investing is simple, but not easy. The hardest part isn't choosing what to invest in. It's staying consistent when emotions are screaming at you to do something stupid. The market rewards patience. It punishes impulsiveness. The solution: have a plan and follow it. Write down why you're investing, your strategy, your rules for buying and selling. So when emotions rise, your plan speaks louder. Turn investing into a system, not a reaction. Let's quickly recap. The top 5 investing mistakes people make are investing without a clear goal, trying to time the market, chasing hype instead of fundamentals, ignoring diversification and risk, letting emotions control decisions. Avoiding these won't make you rich overnight, but avoiding them will dramatically increase your chances of building real wealth over time. And that's what investing is about. Not luck, not hype, not speed, but discipline and consistency. If you found value in this video, like, subscribe, and share it with someone who's starting their investing journey. And tell me in the comments, which of these mistakes have you made before? Thanks for watching. Stay patient, stay disciplined, and I'll see you in the next one.